Today, I'm going to share with you what's happening in our various property markets around the country, some key criteria you need to consider so that you can predict accurately what's going to happen in the future, and why so many people will miss out on some major wealth building opportunities in 2024. Hello, it's Nero here, and let's begin by looking at CoreLogic data for what property prices did last month. So when we look at the CoreLogic data in this table, what we can see is that Sydney property prices rose 0.5% last month, which is the fastest they've grown in the last few months. So that seems to indicate that Sydney property prices may be now starting to rise and more quickly. Melbourne, after property prices dropped for a couple of months in a row, showed a slight uptick of 0.1%. Essentially though, I'm going to call the Melbourne market roughly flat right now. But then look at Brisbane, including the Gold Coast, property prices rose 1%. Adelaide property prices rose 1.1%. And Perth, they grew an astonishing 1.8%. But what's the key thing here is that these are simply looking at the median price point. When you look at pockets of Brisbane, Adelaide and Perth, there are certain areas where property prices are rising way more than what this average is talking about. And in many of these areas, I'm seeing property prices rise an amazing $10,000 every month. So what that means is that for many buyers who had a budget of say $550,000 or $600,000 and were thinking about buying last year, but decided to adopt a wait and see approach, they've now decided to come back and try to buy, and they've realized that the market has moved. They can't get into the market for those prices that they had in mind a few months ago. And I expect that there'll be many people in 2024 who have a budget of say $650,000 or even $600,000 who say they're going to wait and see. When they finally realize that they should be buying, they'll have waited too long, the market will have moved, and they'll have missed out. Here's what CoreLogic's research director Tim Lawless had to say about the property market. Housing values have been more than resilient in the face of high interest rates and cost of living pressures. The ongoing rise in housing values reflects a persistent imbalance between supply and demand, which varies in magnitude across our cities and regions. So his comment here backs up the data, which is saying that different areas are performing differently based on their demand versus supply gap. In the areas where the demand versus supply gap is bigger, those areas are rising more quickly. In areas where demand versus supply is roughly the same at existing prices, property prices aren't doing a lot. He then goes on to talk about how the rate of price growth is actually getting faster in multiple markets around the country. The re-acceleration in value growth has been accompanied by a bounce back in auction clearance rates, which average in the high 60% range through February. So let's have a look at the auction clearance rate data from just the last say 3 or 4 weekends, and then I'll share with you why it's so important. See, here we have the clearance date from the first weekend in March, week ending 3rd of March 2024, and we can see here that the orange bar reflects the data from the weekend just gone, and then the light yellow bar reflects the stats from 12 months ago, so from the same weekend last year. And what you can see is that in Sydney, Melbourne, Brisbane, the auction clearance rates are all higher than they were this time last year. Adelaide slightly below this time last year, Canberra significantly higher, but essentially across our combined capitals, auction clearance rates are higher right now than they were this same weekend last year. Let's go back and look at the data for the week ending 25th of February 2024, so the previous weekend. Again, you can see Sydney, the orange bar, auction clearance rates are much higher than the auction clearance rates for the same weekend 12 months previously, which is the light yellow bar. Same in Melbourne, same in Brisbane, same in Adelaide, in fact, same across all of the capital cities where we have the auction clearance rate data. And if we look at the previous weekend, the weekend ending 18th of February 2024, same thing, auction clearance rates are higher for this same weekend than 12 months ago. So why are we looking at auction clearance rate data and comparing it to 12 months ago? It's because of this following chart. Here we have the clearance rates in orange versus the change in dwelling values, which is the blue line. And what you can see here is that the blue line essentially follows the orange line. So what I mean by that is property price growth tends to follow auction clearance rates. So you can see here that as we got to the end of 2023, the auction clearance rates started to dip. Then what are we seeing at the start of this year? The auction clearance rates have started to rise, and the blue line looking at property prices is also rising. Okay, so if we can continue to see auction clearance rates remain high or higher than they were at the same weekend 12 months ago, what that indicates is that the demand is there for properties, and that's going to keep driving property prices higher. So then the question is, do we have any way of predicting what's going to happen to auction clearance rates going forwards? Will they continue to remain high? And the answer to that question comes down to, well, let's look at demand, let's look at the growth in loans. Here we have another chart looking at Australia housing credit month on month. And what you can see is that sort of in the mid part of last year, April, July 2023, growth in housing credit was sitting at about 0.3%. But then it's risen now to 0.4% from October, and it's staying that way. So in other words, there are more people taking out loans right now than there were, say, 6 months ago. Now, this might come as a surprise when you consider that interest rates are at the highest they've been in for over a decade. But what it shows is that because there is so much more demand than supply, there are enough people out there who can afford properties at their prices right now in multiple areas around the country. And when you consider the fact that inflation is starting to fall, most lenders are expecting interest rates to start coming down from the second half of this year. What that means is there'll be another big group of people who currently want to buy property, whether it's their own home or another investment property, but they just don't have the borrowing capacity. And the moment interest rates start to fall, their borrowing capacity will be increased, which will increase demand even more. And that's why this demand over supply gap is here to stay for some time yet, and why property prices are likely to keep rising. But then if you're thinking about buying an investment property, you might be like, but what about all these headlines about investors jumping out of the market because investors are stressed? And so it can seem like maybe as a property investor, you shouldn't be jumping into the market until you dig deeper into the data. Have a look at this. This chart here tracks the number of mortgages, not including refinances, going to investors versus first home buyers. The data is produced by Macro Business. The source is Australian Bureau of Statistics. And you can see here that the blue line, which is investors, look at how it is rising quite sharply. So what that means is that yes, although the number of properties that are being sold right now by investors has risen to 18%, which is higher than normal, the number of mortgages that are going to investors has actually gone up to 36%. So what that means is that although some investors may be selling, there are even more investors buying these properties from investors, also from maybe other owner-occupiers, because many savvy investors can see that property prices are set to keep rising this year, not everywhere, but in different markets around the country, because of the fact that we are not building enough properties for the number of people who we have living in Australia. And you can see that from this next chart, which looks at dwelling completion versus population change. The blue line is tracking completions, and you can see it's actually falling, but look at the red line. Our population change is through the roof. So it's clear that property prices are rising in multiple areas around the country. Sure, they're not all rising the same. Some areas are clearly outperforming others. But the fact is that for many property investors, especially people who've got a budget of say under $1 million or so, there are some opportunities right now for you to really get ahead so much more quickly, because properties in these lower priced areas are actually rising way more quickly than properties in areas that are more expensive. So that's why I think 2024 is a great year to buy an investment property if you can afford to, if you can do your due diligence correctly. If you want help with it, either reach out to us or click the link below to get totally for free the digital version and audio version of my book. I really hope you'll take advantage of the opportunities 2024 provides to many property investors.